We're about to see a cataclysmic move in the stock market and crypto. In the next week, we could possibly see a massive price move. But not just a massive price move, but an integral price move that could end up setting the precedent for the current new year. The Fed on February 1st had an interest rate hike by 25%. So the federal funds rate went from 4.5% to 4.75%. This is meant to combat inflation and to raise interest rates to de-incentivize the rate of buying and borrowing. Yesterday, on February 7th, the Fed, Jerome Powell, was at the Economic Club of Washington and said that the disinflationary process, the process of getting inflation down, has begun, and it's begun in the goods sector, which is about a quarter of our economy. So essentially, Powell is saying that the combative measures that will be taken utilizing the disinflationary process, which is the process in combating inflation, has begun. But the thing is, will this work? A lot of individuals are saying that this won't work as it's not enough of a bump in interest rates to de-incentivize buying, as individuals like Peter Schiff are speaking out. The thing about all this information is we've got a CPI numbers release coming on the 14th of February. We're getting CPI numbers, and then on the 16th, we are getting core PPI numbers. So, if this Fed rate hike worked, we'll see the CPI numbers go down. So the overall inflation numbers of the consumer part of inflation will go down. However, if we see these numbers match the forecast or even get higher, then we could see a cataclysmic event on stocks and Bitcoin. If you look here at the Dow Jones, we're in a bit of a sticky situation. We've been in this downward channel since I believe the beginning of last year. And right here, it's broken out. And we see it's in a bit of a pennant in this area of uncertainty. Currently on the daily, we're seeing a bit of a bullish indicator here. This looks fairly good so far. However, in the past, if we take a look at the SPY, currently the SPY has also broken out of its descending channel. Now, as technical analysis is the study of previous price action, if we go all the way back to 2008, what we see here is a downward channel, very similar to the current downward channels that we're seeing on the two main index funds. However, if you see, this one never broke out. This one fell through completely. If you look at the bear market that was started in about 2000, we see again this downward channel slowly falling through. And then at the end here, we see a push to the upside and the bear market was over. The thing about both of these instances is you see from the beginning, which is at about September 2000, all the way to April of 2003. So it lasted about 2.5 years. If you go to the stock market crash here, if you see here, its downward channel the pattern broke out about 2.5 years after the initial top. If you go to 2008, right here, we see the top was in October of 2007, and we go down. It took about a year for this channel to break down. However, again, we see the top from October of 2000 all the way to the end, the bottom, you could say, in about 2.5 years, again, is when the turn occurred. Right here, what we see currently in the S&P and the Dow Jones, we see this channel continuing and matching the two previous crashes in the 2000s. However, we've broken out of the channel to the top within about 1 year of it forming. Now, what does this mean? Does this mean that it's the end? Does this mean it's a bull run? Does this mean that we're finally out of our recession and stocks and crypto will start booming again? Well, here's the thing. Right now, the Dow Jones is in a critical position. This right here is an extremely important point of price. If this continues to bounce back and forth in this little pennant until the CPI numbers come out, when the CPI numbers come out, if they are bearish, if they are higher than the forecast, this could be the final straw and we could see an absolute plummet from this price point. This right here could be the move to the downside that we've all really been expecting. However, in the time leading up to CPI numbers, we could see a bit of a push in price here. And if the CPI numbers are good, we could see a push up to the 35,270 level. The thing is, the likelihood of the Fed being effective with this recent rate hike and the likelihood of the CPI numbers being positive are fairly unlikely. The fact that the two most recent recessions lasted about 2.5 years, and that this one is only a year in with a critical position right here, showing us that depending on the next piece of information, we could see up or down. The likelihood of this going down is much more likely, of course, inherently. So I would say to anybody, if the CPI numbers and the PPI numbers are positive, if they're lower, we will most likely see a bounce in stocks and in crypto. But will it be a permanent bounce or will it be a bull trap? If the numbers are positive, we will most likely see a bull trap. I would not advise anybody to buy into anything. This bull trap will most likely come to a point of resistance and then fall again. However, the likelihood of news being positive is very slim to none right now. If you look on Bitcoin, Bitcoin's at a point of resistance. It's at a very crucial point of resistance, and here it looks like it's about to fall through. Once these CPI numbers are released and they're negative, this is gonna completely crash, as well as the US 30 and the S&P 500. All I am saying is to be cautious in the next week, as we are at a very, very crucial spot in the stock market, in crypto, in the financial world, in day-to-day living. Right now is the next few weeks we will see the start of the real recession, the start of the final downturn. But there is no need to be depressed about this. This is a good thing. It's good for things to recuperate. It's good for things to come back, because once it's done coming back, in the next 1.5 or 2 years, however long it may be, the opportunities will be endless. And if in this economic environment you save your money, you be very cautious with spending, if you can make a lot of money in the future. You just have to be patient and you have to be attentive to what's going on. So that's all I have to say. In the next week, watch those CPI numbers. Be careful what the Fed says. We're most likely going to see a cataclysmic event in the next week to 2 weeks. Be very attentive, even if you're trading crypto, to watch the state of the Dow Jones and the S&P 500 right now. Bitcoin's at a crucial state. If Bitcoin enters a downward trend back into this channel here before the CPI numbers are released, if the CPI numbers are released and they're negative, this could send Bitcoin plummeting down into absolute new lows, especially after this insane buying right here. So watch your backs, be careful, and make smart trades. Thanks so much for watching. Make sure to like, subscribe. Check me out on TikTok and Twitter as well, and have a good day. See you in the next one.